Think back to late 2018. Everyone in crypto was screaming one thing from the rooftops. ICOs are dead, long live STOs. Since then, the hype and buzz around security tokens and security token offerings has all but disappeared. So, what on earth happened to the next hottest thing in crypto? Did the initial exchange offering craze of 2019 kill off STOs? My name is Guy, and in this video, I'm going to try and answer that with my in-depth overview. Also, be sure to stick around till the end if you want my personal take on whether it's even worth having on your radar and if there really is any future for STOs. Before I launch us into the world of security tokens, there are a few quick things I need to say. Guy, the crypto guy, is not a financial advisor. Make sure you visit your financial advisor before making any moves in the crypto space. Also, I want to welcome everyone who's watching my videos for the first time. It's great to have you on board. Oh yes, and if you want to catch more of these, then don't forget to smash that subscribe button and make that little bell ring. Alrighty, let's jump into this security token stuff. Now, if you know exactly what security tokens are, feel free to jump ahead with the timestamps provided. However, if you're still not 100% certain, I want to take you through a bit of an overview. In a nutshell, security tokens are simply a tokenized representation of an underlying security. Securities are pretty much everything you can possibly invest in that you would have an expectation of profits. This includes things like shares, bonds, and real estate. Admittedly, the definition of a security is slightly more nuanced than that. However, this is a pretty good stripped-down explanation of it. A simple example of a security token would be an imaginary company called the Guy Corporation, which has 1 million shares. Given that I am the CEO of this company, I could decide to issue security tokens that represent shares in the company. So for every share issued, we would have one security token issued, and instead of trading the shares, we simply trade that security token. To really get what STOs or security token offerings are, I could probably explain what an ICO or initial coin offering is. ICOs happen when a company sells crypto tokens to raise funding for the project to cover the costs of operations. An important thing to know is that these tokens are intended to be usable in the ecosystem the company plans to create. The ICO investor is effectively getting these tokens at a discount if that crypto project can successfully execute their vision and acquire a critical mass of users. Another thing with ICOs is that they're typically open for a limited time frame and close once the amount of money they need for funding is hit. There are two broad categories of tokens in the crypto space. Utility tokens promise the future use of a product or a service. They're not meant to be an investment and are meant to have utility. A real-world example that could be kind of thought of as a type of utility token is an Amazon gift card. If you buy it at a discount, you are not really expecting to make a profit. Instead, you've prepaid and expect to receive an awesome tech gadget or item from Amazon. However, security tokens represent financial assets, like company shares or real estate. What's important to get here is that security tokens are meant to be a form of investment. They share profits, pay dividends, and give you exposure to the price volatility of the underlying asset. Put simply, utility tokens promise a product or service, and security tokens promise a profit. The truth is that though many ICOs started out with the best of intentions, people saw the opportunity to make money. By the end of 2017, billions of dollars were invested in so-called utility tokens that were literally backed by a white paper and nothing more. Of course, a lot of these projects never amounted to anything, and that saw a ton of investors losing a lot of money. Instead of being an innovative way to raise capital, ICOs quickly became a shortcut to get around regulation. Companies that wanted to get around the time-consuming and expensive process of raising seed funding decided to go ahead with an ICO instead. For the founders of many ICOs, this sounded like a great idea because with utility tokens, you're not giving away any shares or distributions of profits to the people that provided you with the funding. As things got out of hand, the complaints rolled in. Ad-serving giants like Google banned crypto ads, and regulators began turning their attentions to ICOs. The question was whether these ICO utility tokens should be viewed as securities or not. Almost every project that was put in front of a regulator was deemed to have sold a security, and that meant fines and even sometimes prison time for the project's founders. So that's why you don't hear about ICOs these days. It's because project founders are rightfully fearful that the SEC could come down upon them like a ton of bricks. Stock market listings are known as IPOs, or initial public offerings. These are regulated, take ages to get approval, are expensive, and are legitimate. However, there is a middle ground known as STOs, or a security token offering. This is the process of selling securities to the public without the need for an IPO. All tokens sold are securities, and everyone who gets involved is deemed to be an investor. These STOs are also meant to be compliant with anti-money laundering regulation and securities laws. The reason why STOs do not require the same regulatory oversight as IPOs is due to exemptions. In US security law, you can be exempt from registering with the SEC under a few regulations. Regulation D is commonly used for STOs, and this says that you're exempt if you only raise money from accredited investors. To get that accredited investor status, you'll need a net worth of over $1 million or an annual income of $200,000 or more for the last 2 years. Under this regulation, a company can sell an unlimited amount of securities. Then you have regulation crowdfunding, where investors of all shapes and sizes can participate. However, the maximum amount of capital that can be raised is $1.07 million. Under Regulation D and Regulation Crowdfunding, investors would be forced to hold their investments for at least a year before being able to sell them. Under Regulation A+, you would require the thumbs up from the SEC, but it's open to all types of investors. The capital raised would be limited to a maximum of $50 million, and securities could be bought and sold whenever the investor wanted. Once a company falls into any of these regulations, they can sell security tokens to US investors as part of an STO. So, now you know what security tokens and STOs are, I want to move on to explaining how it could democratize finance. Imagine a normal person, let's call them Tiny Tim. Tiny Tim wants to save up money for their child to go to university in the future. Yes guys, education is key, and that's why I like to make videos like this one. So, Tiny Tim is like you and me. He works hard for a couple of years and saves up $5,000. However, Tim is not silly. He knows that money is losing money every day due to inflation. He's racking his brains on how to protect the purchasing power of his child's nest egg, and comes to the conclusion that investing in a property is a great idea to achieve this. That's when the cold, hard reality hits Tiny Tim. Though $5,000 is a decent sum, it's not enough to get you into the property game. In the traditional financial system, Tiny Tim is simply excluded from owning property. However, that's where security tokens could solve that precise problem through tokenization. So instead of having one person buying one house for $300,000, we could have 1,000 people paying $300 each and sharing this house. The sweet thing with tokenization technology is that you can buy a fraction of almost anything. For example, art, fine wine, and rare baseball cards. This gives power back to the people and has the potential to democratize finance and investments. It enables people who were excluded from ownership of certain assets in the past to own a share of these exclusive assets. Security tokens enable regular people to invest in a wider range of things that could save them from inflation. What's even cooler is that security token holders can also sell their investment at any given time. In short, that's one of the key reasons why there was a ton of hype around security tokens in 2018. The other key reason was, of course, the idea that the STO would replace the ICO. However, as many of you know, STOs have been somewhat of a dead zone for the last year or so, with little to no coverage. That's a massive fall from grace from being touted as the next hottest thing in crypto. What on earth has happened to security tokens and STOs in 2019, and will they come back into the limelight in 2020? The STO sector started in early 2019 with the Status Group partnering with Consensus to help develop its digital asset platform Codify. One of the awesome things Codify did in early 2019 was exploring the idea of real estate asset tokenization. They did this with Her Majesty's Land Registry, otherwise known as HMLR. For those non-Brits, this organisation basically records the ownership of land and property in England and Wales. In terms of the value of these recorded real estate assets, we're talking about over £7 trillion. Codify wanted to showcase to HMLR how the real estate markets in the UK could be revolutionised by security tokens through making fractional ownership of property easier and reducing associated costs, making it easier to manage these assets and trade them, open up real estate investments to a wider audience, and improve the transparency of data and records. Codify presented its issuance platform and marketplace to show HMLR the benefits of adopting security tokens in the UK real estate market. Now, there was no mega deal signed or anything like that. However, governmental institutions like HMLR need to be educated about blockchain assets like security tokens, and this whole exploratory workshop was certainly a step in the right direction. However, STO deal flow did slow as we progressed through 2019. Indeed, the illusion that STOs were actually easier to sell to investors than other types of private placements was shattered. Although regulatory exemptions did mean STOs could be launched with a significant reduction in red tape, businesses using these new funding methods began to realise something fundamental. I want to give a quick shout out to the sponsors of this video, Paxful. Paxful is one of the easiest and coolest ways I've found to buy or sell Bitcoin instantly. Paxful is a peer-to-peer marketplace with over 300 payment methods. This includes some truly crazy options like gift cards for World of Warcraft and Amazon, to cash in the mail or even phone top-up cards. Over 100 e-wallets are also supported, including the likes of PayPal and WeChat Pay. To get started on Paxful today, go through the link in the description. Then simply select the payment method you want. Scroll through the marketplace, identify trusted Bitcoin sellers by looking at their reputation score, and select the deal you want. Finally, key in the amount of Bitcoin you want to buy, and you're done. So, if you've had trouble with limited payment methods on crypto exchanges, then you should definitely check out Paxful. After all, 3 million users can't be wrong. Now, back to the magic. For fundraising to be successful, they would ultimately have to attract the interest of high net worth individuals. Individuals who had historically been involved in private placements. The problem, of course, was persuading these types of investors to part with their cash. STOs who had relatively unknown management personnel and offered investment into high-risk projects found that they were up against it. These types of investors turned out to be skeptical of concepts like fractionalized real estate or commodities that already trade in other ways. Another major problem in raising funding via STOs is that most high net worth investors can do it through additional means for similar returns. That's why I personally think that for these sorts of investors to really enter the security token space, they need to be offered investment opportunities that are high growth, high margin, and are technology driven. A bit like the type of investments that private placements have traditionally attracted. Sure, raising money from people like you and me with a white paper and a grand vision is one thing. However, people have since discovered that this same tactic simply doesn't fly with many of the high net worth investors STOs are trying to target. Anyways, back to our 2019 recap. On the institutional side of STO issuances, there was progress in terms of building out the back office functionality and overseas infrastructure. July 2019 saw the launch of 1x and its security token exchange, which is located and regulated in Singapore. One of the problems with this STO platform for average retail investors is that we're not allowed to use the 1x platform. Instead, access and use are restricted only to institutional and accredited investors. August 2019 saw the issuance of a 50 million Aussie dollar bond I by the World Bank. This was the first bond created, allocated, transferred, and managed throughout each step of its life cycle using blockchain tech. So, what the World Bank effectively did was issue 20 million Australian dollars worth of security tokens. 2019 saw an additional institutional issue out in Europe. In September, Santander issued $20 million in tokenized bonds and transacted them on the Ethereum blockchain. As Santander put it, this was, quote, a first step towards a potential secondary market for mainstream security tokens in the future. Pretty exciting stuff when you consider that the global bond market stands at over $100 trillion. All this begs the question, what happened in the STO space for retail investors? The long and short of it is, not very much, particularly when it comes to security tokens you can trade today. If you hop over to stomarket.com, which is the STO equivalent of CoinMarketCap, you'll see that there are actually only 9 security tokens that are listed as tradable. Now, that's a pretty grim picture indeed. In fact, tradable STO tokens have a market cap of just over $55 million, with over half of that being T0. Another top STO aggregator site is stoscope.com. Here you can only see 2 active STOs in fundraising mode, and that's it. After hearing all this, you might have guessed why STOs have seemingly fallen off the face of the earth in 2019. The industry as a whole has seemingly focused on educating government institutions like Her Majesty's Land Registry in the UK. Now, that's an area where the typical crypto enthusiast cannot get exposure to. In all honesty, there is still a lot of regulatory uncertainty when it comes to STOs in general, and that seems to be one of the main reasons for the limited number open to retail investors. I also suspect that the lack of retail action is why STOs have kind of fallen off the radar when it comes to crypto publications and YouTube channels. So, is it really regulation that's holding STOs back? Well, I decided to take a look into what's happening in Thailand and Taiwan. Why? Well, these 2 countries were among the first to establish legal frameworks around STOs. The really interesting thing is that despite these legal frameworks, both nations have failed to attract any meaningful blockchain-based securities listings. In 2019, Thailand expanded a royal decree on digital asset businesses. This would allow for the creation of STO portals licensed by Thailand's SEC. After this amendment, 5 security token exchanges popped up, with all of them ceasing operations by September 2019. Taiwan published its first draft for STO laws in mid-2019 and asked for feedback from the STO community. However, despite these steps towards clear guidelines, the process has stalled. The Taiwanese Financial Supervisory Commission has pushed the final framework back till 2020. When it comes to the current framework, STO companies have simply not been interested, and no one to my knowledge has begun STO fundraising in Taiwan. Part of this might be due to the regulatory limitations, which only allow for securities to be sold to accredited investors with a maximum investment of just $10,000. To help explain the lack of interest in STOs in Taiwan, we can look at the country's GISA initiative from 2013. This basically provided a platform for small-sized non-public companies to raise funding. In general, the equity crowdfunding market in Taiwan was pretty strong. However, the GISA failed due to strict regulations limiting investment to accredited investors who were only allowed to back each project with a maximum of $2,000. If I'm being honest here, I think a similar thing has happened in Taiwan with STOs. There simply are not enough people out there with a net worth of $1 million or earning $200,000 plus per year. Also, do these high net worth individuals really want to be limited to a maximum investment of $10,000 if they find a project they really want to back? I'd imagine that would be super off-putting. Also, even if projects did run an STO with these restrictions, you would expect some pretty low trading volumes, and that's probably not the type of environment STOs want to launch in. Top stuff on hanging on there till the end. I know I've covered a lot, and the truth is that I've only just scratched the surface. However, I'd like to give you my closing thoughts. STOs and security tokens were meant to be the next big thing in crypto. However, so far, they've certainly not lived up to the hype. In 2019, there wasn't any sustained news coverage, and it would have seemed that interest had dried up. Indeed, news follows events. STOs and security tokens have been a bit of a dead zone in the retail space recently. Very few STOs were being launched for retail traders, and an even smaller number of security tokens are readily tradable. However, when it comes to government institutions like Her Majesty's Land Registry in the UK there has certainly been progress in terms of potential applications. Institutional players like banks and the World Bank have already been tentatively experimenting with security tokens throughout 2019, and that is certainly cause for optimism. What the case of Taiwan shows us is that when it comes to STO regulation, it needs to be built in a way that does not stifle innovation or the appeal of this new technology. Opening up STOs to only accredited investors and placing low investment thresholds is probably one of the key reasons why security tokens have not taken off there yet. When it comes to jurisdictions like the US, people are hoping for a lot more clarity from the SEC. To the SEC's credit, they have been commenting. However, they certainly have not been as clear as the industry would like. Back in the days of the ICO boom of 2017, the attitude of "don't ask, don't look before you leap" was rife. Times have changed, and the industry has certainly been evolving with a lot more players who take the regulation seriously, particularly so after people started seeing the SEC crack down on some ICOs. What will hopefully happen is that as the regulatory landscape flattens out, we'll get a better idea of what's allowed and what's not. That would enable entrepreneurs to operate within a set of guidelines that they can use to push their products forward and raise funding safely. So, what's my view on the future of STOs and security tokens? Well, there have been a lot of interesting developments in terms of governmental and financial institutions exploring the sector. However, I'm pretty bearish in the short and medium term when it comes to retail investors like you and me. Clear and thoughtful regulation needs to be created, and for that to happen, we need governments to pull their finger out, which history shows can take a while. In the long term, though, I'm more optimistic. STOs could usher in a new way for businesses to raise funding. The idea of democratizing access to a wider range of financial assets is an alluring one. After all, should investments like property be the preserve of the few when we have the technology to open it up to everyone? I think not. Anyhow, that's all for today, folks. What are your thoughts, though, about the future of STOs and security tokens? I'd love to hear them in the comments section below. Thank you so much for watching, and please do remember to drop me a like if you liked this video and sub if you loved it. Guys, I have to level with you. There is so much more that I wanted to share in that video, but I just didn't have the time. Now, this is exactly why I have my weekly newsletter. It's my regular rundown of what's going on with crypto, as well as some unique coin picks that you just can't miss. Sound like a good idea? Righto, it's pretty damn simple. Ping over your email address in the sign-up form below. My next newsletter is being cooked up as we speak. Chat later, chaps.